Number, Bristol-Myers has announced an acquisition this morning of Medarex. The New York drug maker will pay $2.1 billion in cash for the pharmaceutical company, which develops treatments for cancers. With more on why Bristol-Myers made the deal and how it could impact you, we're joined by Jeffrey Kraws. He's CEO and co-founder of the independent equity research firm Crystal Research Associates and an expert on all things pharmaceutical. Jeffrey, good to see you.
Good to be back.
First and foremost, the earnings, what you can see thus far. I know it just came out moments ago. Kind of what you expected?
A little bit what I expected. Earnings were solid. It was not a blockbuster quarter. They had some improvement in cost efficiency, and they did not have revenues erode as significantly, at least yet, on a couple of their key products like Plavix and Abilify. But it was not a quarter to change one's opinion of the drug company. The reality is this acquisition was much more important.
Okay, let's talk about the acquisition. $2.1 billion. I know it's 2.4 if you include $300 million that was sitting on Medarex's books. Why do this deal? What does this give Bristol-Myers?
Well, Bristol-Myers has recently acquired a lot of smaller biotech companies over the past couple of years, and some of those companies were private. I think Bristol-Myers is still very much feeling the sting from Lilly beating it out on the InClone acquisition, if you can call it beating it out. They wanted to make sure that they weren't going to be outdone on this bid. It gives Bristol-Myers an expanded pipeline in the biologic framework. The CEO has been saying he's going to focus more on disease areas and specifically try and go after becoming more of a biological pharmaceutical company, so incorporating biotechnology. It will give them an expanded pipeline in the autoimmune area, it will give them an expanded pipeline in the cancer area, and it will also give them the ability to have a different foray into infectious diseases. So a very good pickup for them with new novel technology. Medarex has been able to put 3 drugs on the market for large cap pharma companies they had partnered with, and this is going to give them a foray into biologics. Whether it was too much to pay, 90% premium, $2.4 billion for a little biotech company, they must have a lot of information on that pipeline that indicates things are looking good.
Yeah, because part of this has to do with patent expiration on Plavix and making sure that they have some real, I guess, some future winners, particularly in the oncology sector. Does it do enough, or will Bristol-Myers do what virtually every pharmaceutical company is doing? They'll continue to look for more deals.
They're going to continue to look for more deals. They're going to continue to look for some more smaller companies, some more compounds, possibly not acquiring the whole company, but doing a joint venture partnership type thing, because they really need to do what all pharmaceutical companies are doing. We've talked about it before. Matching that pipeline where you've got a lot of cash, but you don't have a lot of time. You've got healthcare reform sitting right on your doorstep, and you better shore up your pipeline, your technology, and you realize the best technology might not come from in-house.
We saw Wyeth report this morning look like better than expected numbers. We saw Merck and Pfizer do the same thing, but a lot of people are looking at the numbers and saying, wait a second, complicated, number one, by acquisitions, but number two, a lot of it is cost cutting as opposed to real substantial growth. Where is this sector headed?
Well, the sector is headed for a good stretch if they can get themselves more efficient and bring products to from the pipeline to the market. If they don't, you're going to see the tremendous pressure cut into the earnings because there's only so far you can cut costs. The one key pressure that's on pharmaceutical companies is you can't cut costs as fast as you're going to lose billions of dollars in sales. So right now they're getting efficient, but they need to bring those products forth. If they don't bring the products forth, there's going to be a lot of pressure on them moving forward. I
was just speaking to a gentleman a little earlier. I don't know if you had an opportunity to see it. Good. That they basically put together this proprietary Alvarir. They put together a proprietary model to look at the impact on the pharmaceutical industry to healthcare reform. And it basically suggested that while they may sell more drugs to those who are uninsured, all the other costs associated with healthcare reform will do little to increase their bottom line. You agree?
Somewhat. You're still going to, the whole thing for the drug companies, the biggest thing for the healthcare companies going through this is to be able to get premium pricing for products that are superior. You're going to have increased utilization of generics. Generics are 63% of all prescriptions filled right now. 63% already. You've got a generic drug in every therapeutic category, yet pharmaceuticals still represent less than 10 cents of every dollar spent on healthcare. So while Obama is focused on cutting this 10 cents to 8.7 or 9.3, the reality is the other 90 cents is not drugs. So he's looking at a big, they're the elephant in the room. They're easy to target. A lot of the other costs are more difficult to get. I agree with...
What are the biggest costs?
Oh, you've got insurance, you've got liability, you've got tort. If you take a look at some of the settlements for some of these drugs that had issues with patients, where you've got, multi-billion-dollar settlements for everything from the Dalkon Shield to Redux, the anti-obesity drug, you can go right down the line. A lot of those costs are hidden in people paying too much for things that are within hospitals as procedures, etc. And the HMOs and the PPOs and the insurance companies are the ones that I would be worrying about if I was sitting back there, because they're a middleman. The drug companies have a direct impact on keeping you alive and keeping you healthy. The other guys? You've got HMO and insurance presidents, CEOs have taken $100 million bonuses, $150 million bonuses. Are they really having a direct impact on keeping you alive? No. The reality is the pharmaceuticals are. You stop taking your drugs, you end up in the hospital. So
excellent point.
I agree with him from the standpoint of, yes, there is going to be an impact. They've had an $80 billion give back. The reality is the people with the money want to live longer. So the only people who are going to help keep you alive for a longer period of time and a higher quality of life is the biotech and the pharma companies. So those guys need to come up with new products. Come out with new products, you're going to be fine. Don't come out with new products, you're going to wither and go away.
Jeffrey, as always, terrific seeing you. Thank you so much.